Millions of pensioners are about to face a tax shock like never before. And it's all thanks to a quiet policy shift that's flying under the radar. For the first time in history, every single person receiving the full new state pension will be paying income tax by 2027-28, according to a startling analysis by the Institute for Fiscal Studies, IFS. But here's where it gets controversial. This isn't a direct tax hike. It's a stealth tax, born from the government's decision to freeze tax thresholds while the state pension value climbs. And this is the part most people miss. It's not just about paying more tax. It's about a fundamental shift in how the state pension is treated for tax purposes. Right now, fewer than half of state pensioners pay tax on their pension income. But within just 5 years, that number will jump to 100%. The reason? The full new state pension is on track to surpass the £12,570 personal allowance threshold for the first time ever. This means pensioners who've never paid income tax on their pension will suddenly find themselves in the tax net. A change that sparked fierce debate. But why is this happening? The government's freeze on tax thresholds, combined with rising state pension values, is pushing more pensioners into taxable territory. Inflation and wage growth are doing the rest, nudging people into higher tax brackets without any change in headline tax rates. Critics argue this is a backdoor way to raise revenue, while supporters claim it's a necessary measure to balance the books. The IFS estimates that extending the freeze to April 2030 could raise £8.3 billion in a single year, a tempting figure for a government grappling with strained public finances. Here's the kicker. This isn't just about tax bills. The IFS warns that freezing thresholds could have far-reaching consequences. For instance, single pensioners relying solely on the state pension might see their net income drop below benefit thresholds after tax, making them eligible for pension credit. This, in turn, could open the door to additional perks, like free TE licenses, but it also means navigating a complex benefits system, adding administrative burdens for both the government and older citizens. Is this fair? That's the question at the heart of this debate. Chancellor Rachel Reeves initially vowed not to extend the freeze, calling it harmful to working people. Yet, with public finances in dire straits, she's now expected to reverse course. Matthew Alton of the IFS calls the threshold freezes a huge tax rise, while a Treasury spokesperson defends the move by highlighting the triple lock guarantee and increased pension credit uptake. Meanwhile, Liberal Democrat Deputy Leader Daisy Cooper slams the policy as unfair and punitive to pensioners and low-paid workers. What do you think? Is this a necessary fiscal measure or an unfair burden on pensioners? Should the government rethink its approach to tax thresholds? Let's hear your thoughts in the comments. This is one debate that's far from over.